back, South Africa's mining sector in 2017 contributed 335 billion rand to GDP, 81 billion rand in fixed investments, and 19 billion rand in taxes. Despite its contribution, however, it is a sector under siege from carbon tax, electricity hikes, and recent labor disputes. It is also one of the most interesting industries, with talk of Vedanta Resources on the prowl for Anglo American. Joining us to dig deeper into the sector's performance and also help us discover the gems is René Hochreiter, who is a mining analyst at NOAH Capital Markets. René, thanks so much for your time. Perhaps let's kick off with the latest news coming out of the industry, and this is the renewed talk of a merged Vedanta Resources and Anglo American via the fact that its largest shareholder, Anglo American's largest shareholder, Arnold Agarwal, is seen to persistently taking the company towards that direction. Now, the latest from that front is that Anglo has hired 3 investment advisors to advise it on a potential new attack from Vedanta Resources. How do you see that whole scenario working out?
Vedanta Resources might be the biggest shareholder of Anglo American, but its assets are actually tiny compared to what Anglo American assets are. Anglo is enormous. It's got the biggest platinum producer in the world. It's got very big mines, copper mines in South America. It has 80% of the Sishen iron ore mine. It has the coal mines still. It's actually, market cap wise, it's an enormous company compared to Vedanta. I don't know if it would make sense for them to merge, but I think Mr. Agarwal's intentions are different to what a lot of market watchers are suspecting.
I mean, no doubt, potentially, as you have described a scenario there, Mr. Agarwal's a potential takeover for Anglo would be met with great resistance. But I mean, one has to wonder why Anglo American would hire 3 investment banks to fend off this potential takeover. And of course, this is speculation at this stage. It is, or the source of this story has not been identified. But I mean, it really gives one the sense that Anglo American here is worried, and it's trying to protect its house at all costs. I mean, do they have anything to worry about?
No, I don't think so. I mean, it's at the end of the day, it's going to be a shareholders' vote. So, you might need investment bankers to make sure that any sort of hostile takeover bid is blocked. But to have a successful takeover or a merger, even, you have to have the approval of the board. And while you don't have that, the likelihood of a merger is very low, except if Mr. Agarwal comes up with a price that nobody can refuse. I mean, and I doubt he's going to do that.
Of course, you do speak to the very known fact in life that everything and everyone does come at a price. But René, ultimately, we're speaking to the broader theme that is happening in the mining sector right now, and that is of consolidation. I mean, in many parts of the world, the cost of mining is becoming too high, and it's not meeting up with the productivity thereof, and therefore the only way to keep shareholders happy and to keep the bottom line fat is by consolidating, which is something that we have seen being quite a prominent feature in Sibanye-Stillwater with its acquisition of the US Platinum or PGM group about a year or 2 ago, and now it's come for Lonmin. What do you make of this trend of M&A activity, and particularly when we relate it to that of Sibanye-Stillwater and Lonmin currently?
Yeah, there's 2 ways you can look at it. Anglo American has had great success, and Anglo Platinum, in getting rid of the underperforming asset. For example, Sibanye-Stillwater is now the proud owner of something that Anglo Platinum didn't want, which is the Rustenburg section of the Anglo Platinum mines. And while it's been disposing of the asset, it's actually got a rating on the JSE, which is very, very much better than all of its peers. But if you're in the position of Sibanye, for example, where your assets are not really that good and they're really not marginal, but they're slightly above marginal assets. In that case, a merger, say, between London and a merger with Stillwater actually does make sense. The reason why there's a merger between Sibanye Platinum Division and London is because Sibanye Platinum in South Africa does not have a metallurgical complex. So that reason is different. But, personally, I don't really like mergers because what you do in a merger is you mix dung and ice cream, and you wind up with dung. So I don't always agree that a merger is a good thing, especially when you have a fantastic asset and you buy a really marginal asset, then you wind up the one subsidizing the other.
Right. I mean,
sometimes,
yeah, for sure. Just looking at that share price reaction from Sibanye Stillwater, I mean, that counts are up more than 30% over the past year. And in this quarter alone being one of the standout performers for the first quarter. And many of the analysts we talk to say it's because investors are, pricing in that Lonmin acquisition being a done deal, and they clearly giving it the thumbs up. But for you, I mean, would you buy a Sibanye Stillwater right now or buy more into it, given your view that you think mergers are a mixture of dung and ice cream and the net result is dung, or would you stay away?
I would have a good look at it. You see, Sibanye Stillwater and Impala at the moment are incredibly marginal. Well, not that marginal anymore. But if I had to take a view that the rand would get weaker, the shares that I would buy, and all the platinum prices remaining the same, the shares that I would buy is probably Impala and Sibanye Stillwater. But if I had to take a view that the rand is not going to get any weaker, it's going to stay at about this level, then I would go for the more quality shares, or the higher margin shares, like, for example, Anglo Platinum, Anglo American. They would be able to sustain any strengthening in the rand much better than Sibanye Stillwater or Impala would. So I would, it depends on the circumstances and your view going forward. I believe that the rand is going to get weaker. It's been getting weaker at about 7% per annum since before Mandela and even before in the 1960s. That's the way the rand is. Our productivity is not the same as America or Chinese productivity, so our rand is going to get weaker over time.
For sure.
The average, like I said, is different.
All right, so taking the view of the currency, of course, it's more than the currency that affects the bottom line of these platinum miners. It's the fact that carbon tax is soon to be introduced here in South Africa, and that's going to be painful for a lot of miners. Anglo Platinum having cited that recently. It's the fact that Eskom is still quite a big problem here in South Africa, and you've got that uncertainty over power and also electricity prices going up in a tangent. It's also the fact that you have got a very rigorous labor force, and when they feel it's time after 3 years to campaign for higher wages, I mean, they will. So taking all those factors into account, who then would be best positioned in one's portfolio to resist or to be able to live up to all of those headwinds and still make money?
To me, the best shares at the moment in a resource portfolio would be Anglo Platinum, my number one, because they're actually paying a dividend, and they are sort of, quite impervious to a strengthening rand, or even to higher costs in terms of Eskom or the carbon tax. They also have very good relations with AMP2 and NUM, so I don't expect too much, headwind in that one. Anglo American as well. I quite like BHP Billiton because most of their assets are not South Africa anymore, so I would put that into a portfolio. I would have a look at Impala maybe, because they are looking at disposing of the underperforming assets, and even though the carbon tax and increased electricity costs would affect them more than, say, Anglo Platinum, as soon as they start disposing of some of their assets, I think their margin will go up and they'll be a little bit more comfortable, even if there was a carbon tax coming in or electricity hike.
Well, René, thanks so much for those picks. We will leave it there. That was René Hochreiter, who is a mining analyst at Noah Capital Markets.